Thank you very much, sir, for kind introduction. The dignitaries of this on the dais and off the dais. Good afternoon, sir. And I first of all thanks to Mr. Ramachandran and other organizers of this Madras Development Society, Management Development Society, to give this wonderful opportunity to give the gist of this latest amendment under the GST law. Sir, today there are two issues are burning under the industries. One is textile industries and is footwear industries. These two industries are going to increase this rate of tax and with effect from 1st January 2022. All this 5% rate of tax of this ready-made garments or cloths and fabrics are going to increase the GST rate from 5% to 12%. This is the main issues for this textile industries. 2 days before also 15 lakhs persons will get the loss of the job in the textile industries and 1 lakh industry will close because of the increasing the rate of GST. But I don't think so. These are all will affect, this increase of the rate will affect. But one thing is practically the government should understand that the person, the textile industries, the retail showroom, like Poti, Sarona stores have a lot of stocks under the 5% rate of tax. For example, 5% of the rate of tax in ready-made garments are under the stock of the 2 crores worth. Under this, for example, one cloth is 550 rupees. This comes under the 5% rate of tax. But suddenly with effect from January 2022, it was increased. It will be increased to 12%. What will happen? Whether this 550 rupees can be increased? No, because of as per MRP rules, it cannot be increased. Only manufacturer can have increased the right to increase this rate of MRP. But retailers cannot increase this rate. This is the practical issues under the retail showrooms to increase the rate of tax from 5% to 12%. How to manage the 7% from 1st January 2022? There's a lot of issues going on under industries level and a lot of representation also given to the finance ministry to consider these issues and modalities to this increasing of the rate of tax. And another one is footwear. Footwear industry is less than 1,000 rupees. There is no GST, but now it is also increased to 0 to 12% with effect from 1st January 2022. The same issues will be happen to these industries also because that stock problems. This suppose the small showroom as worth of 10 lakh rupees stock of this less than 1,000 rupees footwear, what will happen? Because this is under this retail 1,999 rupees, there is no GST involved while purchasing these goods from the manufacturer. But while selling these goods, this footwear, with effect from 1st January 2022, the person who is piled up the stock should collect the tax 12%. There is a lot of working capital issues and practical issues also there. This is the two things very important to that industries. And another one important amendment was made in Finance Act 2021, and this effect will be said educational institution and trustees comes under the GST law. No. First of all, it is not at all things. There must be 4 conditions are there. If it is followed this condition alone, you can get the exemption. Otherwise, there is no exemption for all educational institution and trust. Even it is registered under section 12A also. Under this scenario, one of the major amendment was made under Finance Act 2021 is that is the club and association provided any services to its member is also comes under the GST law with effect from 1st January 2022. That is, for example, Cosmopolitan Club, Gymkhana Club, number of clubs are there in Chennai. These clubs rendered or provided any services to its own member, this also comes under the GST law with effect from 1st January 2022. Please note, this is major amendment. This is a nullifying of the Calcutta Club Supreme Court case. In the Calcutta Club case, Supreme Court says that any services or goods provided to this board member by the club is not a service or supply under the old law, service tax law, but it is also applicable to the GST law squarely. Hence, the government was amended this with Calcutta High Court case, Supreme Court case, and nullifying this provision, and Section 7 was amended, and it is also inserted a new provision 7(1)AA called that if any services provided by the clubs are associated to its own members, it is also taxable. Please note, this is one thing. Second one, Section 16 subsection 2 class A was also amended. What is this? Sir, for claiming the input tax credit, you have to follow some of the rules or some of the conditions. And one of the condition is the supplier has to pay the tax to the government. Otherwise, recipient is not eligible to take the input tax credit. This is one of the major amendment. This is one of the issues to claim the input tax credit. But now, what is the amendment was made under Section 16 subsection 2 class AA? Say that if a person receiving any goods cannot claim the input tax credit if the person supplier or if the person or supplier make the supply and included in GSTR1 return, these are all supplied to the government, and the same GSTR should communicate to the recipient by way of 2A. This two condition is not followed, this person cannot take the input tax credit. Please note, from the 1st January 2022, whatever the input tax credit available on the date of on or before 20th of every month, that can be available, that can be eligible to take the input tax credit. Remaining things, suppose you have an invoice to claim the input tax credit, it cannot be done, because if it is taken, interest 24% and penalty is also applicable. Please note, this is very important amendment was made by the government with effect from 1st January 2022. The third one amendment is supply to the special economic zone. If many number of special economic zones is there, Madras, MEPC is there, and other special economic zones are all there in Chennai. Any supply of goods or services to special economic zone is exempted from the GST, and you can claim the refund of the input tax credit. But with effect from 1st January 2022, any supply of goods or services to the special economic zone, one is exempted only for authorized operations. This authorized operation specified by the Ministry of Commerce in its license. You can do, these are all supply of the goods and services. That supply and services is alone is eligible to claim the refund, is eligible to supply without the GST. Others operation cannot be exempted. For example, if supply any goods for false ceiling, it is not exempted to special economic zone. Only the Ministry of Commerce has to include in his approval letter. These are all goods and services is the authorized operation. For such operations only, the person who supply the goods or services to such special economic zone is exempted, otherwise not exempted. This is another one thing. Second one, fourth one, suppose you export the goods, you can claim the refund of this input tax credit remaining unpaid. Remaining is there in your 2B or 2A. Suppose you are exporting the goods for other countries, and the amount or payment has not been received within a period of 9 months, you cannot claim the refund with effect from 1st January 2022. Okay. Hence, for example, if you supply any goods to the America and the amount of $1 lakh is not yet received within period of 90 days, 9 months, you cannot claim the refund. Suppose if you claim the refund and the refund was credited in your account, this amount again it should be credited to your government account within a period of 30 days. This is another one of the major amendment is specified under class section 16 of the explanation. Again, last but least, interest. Interest can be made net of the input tax credit. For example, you want to pay 1,000 rupees belatedly, but you have in your hands 700 rupees input tax credit. So you want to pay the interest on 300 rupees alone. You don't want to pay 1,000 rupees. This amendment was made retrospective effect from 1st July to 2017. Hence, these are all one major amendment. That lot of the amendments are there to speak with you, but lack of the times and paucity of the times, I am not able to discuss all this amendment before you. Hence, we will see the next time. Thank you very much for kind.